Hey everyone, it's Matthew from the Daily Trade. I wanted to go over a couple things on what we had today for Zoom. And Zoom is actually what we were playing today. And that is on April 23rd, 2020. So we were pretty much using a lot of different factors into actually considering Zoom. So one major factor obviously would be our flow. And this is what actually brings you into where you can kind of see the market direction where these firms, these hedge funds are actually putting their money into. So what a huge indicator right at open was that we were starting to get these sweeps coming straight in. And that's another indicator of just saying, hey, pay attention to this real quick. Let's see. Let's check it out. And Zoom, by the way, was already up in pre-market. And let's show you right here. Zoom was actually already up somewhat at pre-market just due to the rest of the market as well being up. But one of the things that also showed strength was that nice 5-minute candle at open. It broke through the moving averages, and then it was continuously moving with the 9-day moving average. It also broke a resistance here of 154.90, and I can show you that resistance here in a bit. Let's see. Let me actually show you right now. So seeing that Zoom actually broke the resistance, and let me show you on the daily because it looks better on the daily. So on the daily, you can see it had a resistance right here at the 154.90, and it stayed right there at that 154.90 across the board until today when it opened up higher and it had strength and it pushed a little bit higher into this area with volume. And you can see that that it pushed the area with volume right at open, and it continued to do so. Right here was the 54.90. It pushed with volume, and it didn't stop. It just kept pushing, and it was at the resistance 2 point on the pivot points, following with the 9-day moving average, which is obviously your fastest moving average that we have here. And so it was pushing, and continuously throughout the day, it didn't really push lower than that, and it didn't drop below your other moving average here. So as it continued with the 9-day moving average, you're able to stay within in the trade. And we got out, we were in at this point, and then we were able to get out at a nice point before it dropped back below. And the contracts actually lost their value. They lost about 30% of their value after we sold, even though there was about 2,000 to 3,000 volume on those contracts for options. And that reason is because it was just a dip and sell before the actual buy up of the contracts that it needed. So seeing that happened, we look back on the charts and you're able to see that all the buy ups started happening. And there could have been a nice re-entry at this point, staying with the 9-day moving average and consolidating in this area. We could have had a nice run up into this area. So the contracts at this point, I can show you that. After looking at these, there was a lot of 160s coming in this area. You can see that right here. So I'm going to go ahead and annotate this. So we're going to see that we had a nice 160s in the area, and we were able to pay attention to those right at open. So looking at those and looking at what the price action was, we're able to actually analyze and say, all right, this is a good price to get in at. And if it drops above it or drops below it, we were going to be able to analyze it still. So we were able to see the 160s coming in, another 160. There was a few 160s. And also notice bigly that the 424 expiration, with a lot of volume on the 424 expiration, which is in 2 days, which is tomorrow on a Friday and a weekly option, you're expecting this to actually see a faster move than what you would see maybe 2 weeks out, 3 weeks out, a month out. So seeing that you have a 424 expiration, that's closer. And you're also getting a bunch of them at the same strike price in the area. And then later on in the day, we started to get some nice, more unusual sweeps. So the volume just on the 160s alone today was huge. And just because it broke it, that was a huge indicator that, hey, we might push higher. And let me show you on the daily again. Let me get rid of this annotation. So if we go to the daily again, you're able to see that after it broke that 154 intraday, we were able to still push higher and even past 160. So we got to a good 160 later in the day as well. And then we were able to push to all-time highs, which later indicated, hey, we're going to push a little bit higher. So seeing that all-time highs hit on any stock, you're always going to take that first general rule. And I mentioned this in the chat as well. You're going to take that first general rule of, don't try and be the first one to say, oh, this is the top or this is the bottom if you're, testing new lows or something like that. You don't want to do that because you don't have a resistance. Obviously on a pivot point, you're able to see some resistance, right? But that's not always true to the matter. You should always stick to, your risk management. If you have profits at this point right here in this area where you break the all-time highs, hey, you take your profits and then maybe let one run. But you shouldn't be able to say, hey, this is going to keep running, or I should buy puts at this point right here at the top. No, because this could run for another day and then you'd be out of puts. Or if you're scalping it, that's a different story. But we're looking at a more longer term effect. So seeing that, you're able to actually analyze and check out what's going on with the price action. But yeah, so that is what happened with the actual stock and analyzing the stock movement and charting beforehand. And you can see, obviously, so support and resistance levels are a huge thing. And when it comes down to that, you're going to want to analyze them maybe the night before so you can get in the day after. And, you already have a plan set. I'm going to get in at this point. Let me see if call flow is coming in, put flow is coming in, something like that. And that's where all this comes into effect as well. And we also have this in the chat as well to provide with you. Now let's go over to what we were looking at for the actual. So obviously we are looking at the 160s. So we can see that the 160s, let me put this over here real quick. We can see the 160s were coming in right at open. So when I went ahead, I went and looked at the 424, obviously, 424 zoom, 160 strike right here. I went ahead, I clicked on the right. I was looking at the volume, checking out what was going on in the day. This was right at open towards this area right here. So it's kind of looking huge, right? So you can kind of see in this one candle, almost at open. This was the minute after open. There was almost 1,878 contracts open, or the volume just spiked up. So pretty much we're looking at a lot of volume throughout the day and just at the beginning of the day. And this can kind of tell you in a stock in general, what's going to happen throughout the day. If you get a lot of volume, and obviously you can't monitor every single option chart and see the volume for each one and the volume spike at the beginning of the day. But if you're paying attention to that stock and you have the strike price already in mind, or if you're just looking in general, you can just go in and click and just look at the beginning of the day and just see, hey, this is probably something that's going to be moving today. And then go ahead and do some analyzation on it and check with your charts and see if that's going to be something you should look at. And this is a big indicator, obviously, of, the more volume, it's almost like, the more of a trend, or, the more of a movement it's going to have. So you want to be in that, because the more volume is going to drive your contract prices as well. Obviously, when somebody sells, that's going to be on the bid. So the bid is going to, make your profits lose, or your money that you just put in lose. If the ask is getting higher, which this is the ask, by the way, and this is the bid. If the ask is getting higher, then you're going to be getting, and buyers usually buy towards the ask or on the ask. And if they buy close to the ask or on the ask, obviously you're going to get a higher rate of return, because these people are buying in and buying in constantly, and they want to keep getting in. So the price is going to keep going up. It's a supply and demand, pretty much. And that's pretty much what today was. And overall, the day was good. It was just very choppy. There was a lot of stuff going on today. But other than that, I wanted to say that, this is a good example of what to look for. It's just clean, concise. It has all the indicators that you need to actually enter and exit a trade. It was a perfect call out. And just being able to see that, we had this right on set. So, well, thank you everyone for watching. I hope you got something out of this real quick, and hope to see you in the next video. Have a good one, guys.